Hi, I'm Shawn. Welcome back to our video blog. Today we're going to talk about the rising interest rates and how this affects you. So thanks for tuning in. Interest rates have increased recently. They have crested 5% on the 30-year fixed home mortgage loan. Still historically low. We did have rates much lower than this recently, but with what's going on with the economy and inflation, everything's kind of coming together, and this will affect affordability for buyers. Most of the consumers that I'm working with are surprised to know what it does, and obviously it's more, but how much more is it? 1% higher in interest rate changes your payment by about 10%, making it about 10% higher. So if you were paying $2,000 a month for a 30-year fixed loan, and now it's gone up 1 percentage point higher, say from 4 to 5%, that would be $2,200 in payment. So $200 higher or 10% higher approximately. And that extra 10% is going where? It's just poof, it's gone. It's going to the bank, it's going to interest, because that's what the interest rate is. So interest rates this morning at two of the larger institutions in the Madison, Wisconsin market were 5% and 5.125%, which is shocking to some people who are used to this being in the threes, 3%, 3.5% range more recently. But let's look at it a different perspective. If you have your money in the market, meaning in investments or IRAs, what kind of interest rate are you getting overall? It's much higher than that. And look at it in a different perspective. Also, what's inflation doing right now? Inflation is at 40-year highs and much higher than 5.125% or 5.5% even. This is still not a screaming high number. So what do we expect to happen to interest rates? Everybody's saying that we expect the interest rates to continue to climb and they're going to get to a point where everybody's like, no, I'm just not doing it. There are other programs available that you can certainly do more short term. And welcome back adjustable rate mortgages, where you can do a 5 or 7 year ARM that now you've fixed for a shorter period of time and therefore can get a lower rate. You're betting on, well, I'm only going to be in the house for 5 years or 7 years, or you're hoping that there'll be a more reasonable rate when we get to the horizon of your rate adjusting. Hopefully adjust to a lower rate, or you could refinance at that time. So there are other ways around this. Instead of, once it gets in the exorbitantly high range for interest rates, you certainly could do that as well. I hope this answers a few questions. Maybe it creates a few additional questions. If so, you can always reach out directly to me at 608-212-5743. Thanks for watching our video. We'll see you next time.